In this video, we will be discussing the optimal way to optimize Forex robots properly. A bit about me, I am the founder of Prosperity Algo Solutions, and we are a developer of gold trading robots. Therefore, I've done this quite a few times and might be able to share some good tips and tricks today. So, one of the biggest reasons why Forex robots fail when being deployed in the live markets is that they're massively over-optimized during backtests, and they don't actually have any predictive power or any edge going forward. I think the best way of describing this is to use an example of a system to predict the lottery. So a perfect example would be, let's say somebody tries to sell you a magic system to predict the lottery. And for this particular lottery, there's 1 million tickets. And the seller of the system went and tried 1 million different possible solutions on the past lottery game, the past month's one, for instance. And they simply picked the best one. And then they went to you and they said, hey, look at this magical system which I tried, and as you can see, it predicted the results of the past month's lottery with a 100% hit rate. But obviously, if you tried 1 million different combinations and there was 1 of 1 million would have worked, you're going to find a solution which works. But let's say this system is some sort of star sign based system. Just because it just so happened to coincide with the results last month, if you tried 1 million different completely random systems and one worked, obviously one will work because there's only 1 million different possibilities. But that particular system has zero predictive power going forward. And I find that this toy example can also be applied to trading. So let's say if you try 1 billion different ways of trading gold over a particular month, even if they're all completely random, just by laws of probabilities, a few of them will be profitable, or perhaps very profitable. And that doesn't necessarily mean that there's any predictive power going forward. Let's say, for instance, you were to buy when the 27th period RSI crosses above the 72nd level, and for some reason that gave you a predictive edge in the month of July 2022. It could also just be purely because of randomness. So here we're going to discuss how to actually find optimal parameters for an EA, which involves not doing this, not just trying billions of iterations and picking the best possible one, but actually optimizing properly in such a way to find parameters that give you a statistical edge, not only in the optimization process, but also going forward. So, first starting off with what many people do. What many people do, especially through the use of modern backtesting platforms, which are included in all the major Forex and futures platforms, like MetaTrader has the MetaTrader backtesting engine or strategy tester, NinjaTrader has one, TradeStation. Almost every sophisticated backtesting engine allows you to try different iterations, so it's really easy to do this, and it's very tempting to do this as well, so you can't really blame people. But what they'll do is they'll put all parameters and data into a backtesting engine. So if they have 5 years of data, they will put all of those 5 years into the backtesting engine. And in terms of parameters, not only will they optimize their entries, they'll also optimize their exits, they'll optimize their stop losses, their take profits, and they'll do all of this at the exact same time. Then after running an optimization on all of their data, they'll go and they'll pick the best possible combination, and they would have done millions of iterations where you vary the stop loss, take profit, entry, exit, filters, and they simply pick the best one. And this is extremely dangerous because A, you're testing on all of your data, so there's no out of sample testing, and at the same time, by over optimizing too many parameters, you significantly increase the odds of overfitting because you're simply running way too many iterations. So something that you should keep in mind when running any optimization is you want to use as few iterations as possible to get the desired outcomes, because every time you run millions of iterations, you create significant overfitting risk. Here's actually a really good concept which I would encourage you to look up, called the Deflated Sharp Ratio by Dr. Marcos Lopez de Prado. And he actually found the same phenomenon, not so much in retail trading, but in academic papers, whereas quite a few times study conductors would do so many iterations and pick the best ones that it completely invalidates the actual results of their studies. So he came up with a concept called the Deflated Sharp Ratio, where you should effectively take the Sharp Ratio and divide it by the number of iterations that somebody runs, because your odds of having an actually profitable system go down in a almost exponential manner when people run too many iterations. So it's a good concept to keep in mind, but this goes to show that it's not only retail traders that do this. Academics and maybe entry-level institutional people also would do this. So it's a very common error, and it's a very common phenomenon. So what you should do, this is, I'm sure you've seen this if you've been in the EA space for a while, but out-of-sample testing is very important. So effectively, if you're running an optimization, you typically want to optimize on a fairly small segment of your data, and then you want to test these parameters on a go-forward basis on a larger sample of your data. And this can be done in quite a few ways. I think, like, as a developer, typically you would do something called walk-forward analysis, which would mean that, let's say you train on 2022 data and you predict on 2023 data. Then you train on 2023 data and you predict on 2024 data. So you're training on a certain period of data, and then you're predicting a certain period in advance of that period. And then you kind of roll forward your train and test sets on a continual basis. But as a EA purchaser, let's say you go to a MetaTrader and you buy an EA, it might be a little bit challenging to do this. So what I would recommend for just a typical user is just take a small segment of data, like let's say just pick a 6-month period and optimize on that period within reason, and then use that and then test those parameters on both back and forward testing, so that you're able to see how your actual parameters look on data which they have not been optimized on. So this is typically what should be done. You should optimize on a small sample of data. You should then test on a broader sample of data, and then you should forward test with those parameters just to make sure you haven't over-optimized. So this is really referred to out-of-sample testing, and every time you run an optimization, you should keep this in mind. And really the final point here is limited parameter optimization. So when it comes to what I personally do, is I typically like to not really optimize my entries too much. So in terms of entries, I like to use a real like price action based triggers, and don't try too many iterations. Usually in the strategy development process, maybe you test a handful of them when you're just coming up with the ideas, but really they should be based on a strong logical premise, not based on running millions of iterations to find an optimal trigger and or filter. So really use logical price action based premises combined with fundamentals for your actual strategy. And then what I like to do is optimize your stop losses and take profits once the strategy is actually profitable, just to extract a bit more edge. And typically what I think is a good idea is you should pick a very limited amount of parameters and optimize over a very limited range. So here we see stop loss percent. We're optimizing from 0.25 to 1%, and you're using 0.05 steps. So there's really not a ton of steps here. And then here as well, we're optimizing the start trail percent from 0.05 to 0.5, and we're using 0.05 steps here. So here, when we do it all together, we're going to be under 200 iterations over a relatively small period of data. So in doing so, you are not running a ton of iterations, and you're only optimizing across a very small segment of the total parameters. And doing this significantly reduces your risk of overfitting. So to kind of sum up this video, what I would recommend to you is when you're optimizing a third-party EA, please always keep out-of-sample data optimization in mind. And as a second point, try to run as few iterations as possible using big steps over a limited amount of parameters. So always just keep this in mind. So I hope you guys found this video useful, and if you did, I'd encourage you to head over to our WAP page, which is linked in the description, to get a free trial of any of our expert advisors, which have been developed without over-optimization. So take care and have a great day.